Buying a truck is super exciting, but the wrong financing or even the right financing at the wrong time when you're not quite ready can be suffocating and make life feel overwhelming. The wrong financing or bad timing will crush your cash flow, trap you in bad equipment, and force you to run wild just to keep your head above the water. Today, we're going to break down the right way to buy a truck and finance it so that you own the truck instead of the truck owning you. I'm Chris. This is my 7th year owning a trucking company and hosting the Haulin Assets podcast. When I first started, I thought I knew trucking. Turns out I had no idea how much I would learn. Welcome back to Haulin Assets 2.0, where I take you through the good and the bad, the ups and the downs of being an owner-operator.
Indeed. Welcome back, everybody. Welcome to the Haulin Assets podcast, episode number 190, where today we are going to talk about how to properly and in the right order finance a truck and trailer. Before we get to that, we are going to talk about the monthly finances. Longtime listeners will know that this is something that Chris and I did every month, and we would do a whole episode on it. We're not going to spend that much time on it these days, but we will go over February 2026.
January
2026 numbers.
We just finished up February, don't quite have the books yet. I'm going to leave a teaser at the end of the financial piece about February.
Well, time is a flat circle anyway. I think it's been 6 years now since COVID split the space-time continuum and time has no meaning anymore, so that's fine. Anyway, before we get started, I do want to remind everybody, HaulinAssetsLLC.com, MotorCarrierHQ.com, and what else? Oh, HaulinAssetsAcademy.com. All places you can and should check out. More about that at the end of the show. Chris, let's go ahead and get started. Let's talk numbers, okay? Let's spend just a few minutes going over how things have been looking and how your blood pressure is doing based on these numbers, etc.
A little bit better this year than last year. That's for sure. So total miles ran in January was 121,273, which is the most we've had in a while.
This is on 10 trucks.
10 trucks.
Okay. So yeah, you're up over 12K average per truck, which I remember that was like your Shangri-La. Yeah. It was like 12K is where you really start making money. Okay. So what's next?
Total revenue, $296,267.36.
296.
Another revenue record, even with just 10 trucks versus we've had as many as 12 in the past. So that's phenomenal.
Okay, so the rate per mile then turned out to be what?
$2.44 a mile.
Okay.
Which is the best we have seen since 2022.
Right. 2022, post-COVID, it was up at 250, 260, maybe higher sometimes. But yeah, it's been a while.
It's been a long time since we've seen that.
So with all of this happy talk, the numbers that are looking good, I have to assume that the profit number is similarly nice.
It was really nice. $65,959.65. Again, that's a record as well. We actually had gotten kind of close to that number several times in the past. Even before we'd gotten all the way up to 12 trucks, when the post-COVID boom, we'd gotten pretty close to that number a few times. But it's the best number we've seen in a long time, best month we've seen in a long time. It feels really good.
I don't doubt it. And do you attribute this mostly to your own efforts, to the rate and the freight market that's outside of your control? Where did all this come from?
It's a good question. To kind of abbreviate this financial segment that we're just going to do, not a whole episode, I think I want to focus on kind of 3 contributing factors each month, the 3 main things that either, made for a good month or kind of sunk us. So obviously this was a really good month. Number 1 was just really the strong market and strong rates. Rates and everything were really good. We got that $244 a mile, like I discussed, and it's the best we've seen since 2022. So that's the number 1 contributing factor. 2 is high miles. Most miles that we've had in a month for over a year, and even with 1 less truck So that was great as well.
Yeah, awesome. Well, shall we leave the numbers there for now then, Chris?
Yeah, one more. That was only 2, Craig.
Oh, was it?
Numbers are hard.
Am I? Numbers
are hard.
You probably have a spreadsheet telling you all 3 things you wanted to talk about.
So the third one was a 5th payroll month, and usually that adds a significant amount to our expenses. So even with a 5th payroll month, we still had that good of a number. Otherwise, it would have been even better. Okay.
Well, you know what? What was it? You said 65? Yeah. Call it 66.
Yeah.
That's a pretty darn good month. So yeah, hopefully, things continue like this. We can't count on every month to be like this, but Chris, before we move off the numbers, I do just want to get the lay of the land. You're excited about this. Blood pressure's coming down. That's all fantastic. Do you feel like, hey, it's time to get back to the savings regimen that I always wanted to have, a few years ago? Or is it like, oh, we can finally start digging ourselves out of a hole and then think about, the years of plenty later on down the road?
That's a good question. We want to have like a little bit of breathing room, like a little fudge factor, emergency fund per se. So yeah, a little bit of savings and then start kind of digging out of the hole, paying off some debt. Giving us a little bit more comfort there. And I promised a teaser, February. Yeah. February is not going to be as good as January. Today we're recording this, what is it, the 3rd of February? Yeah, the 3rd of March. So I have a really, really good idea of what the total revenue number is going to be for February, give or take a couple $1,000. Mm-hmm. But it's going to be good. I'm pretty sure better than any month we had in 2025. And this is February. And so February, that is such a good sign.
Yeah, it's not a leap year. So you had 28 days
only
to work
28
with.
days. February, which typically isn't a great month as it is. Right. So super optimistic. Again, it's feeling pretty good.
Love it. Okay. Well, Chris, that's enough numbers talk. Get out of your spreadsheet. And let's talk financing. So speaking of, we go from one number to the next. Yeah. Although, to be fair, when you're talking about an issue like truck financing, there may be some numbers and spreadsheets involved, but you don't have to be a lone ninja to figure all this stuff out. We're going to be talking kind of high level, what to think about, how to approach it, the order in which to do things. So where do you want to start when it comes to the idea of... I guess let me ask you the question. Here's where we can start. I want a truck. Okay, I want to make that leap to owner-operator, and now, oh crap, I have to actually buy a truck and trailer. How do I do that? Where do I start?
So the first thing most people do when they decide, hey, I'm going to go buy a truck, is they go and look at trucks. They go straight to a dealership, and that's the biggest mistake that you can possibly make.
I can think
for
of
several reasons. Well,
okay, no, I get it.
Yeah, it's just a bad way to go up to go about business, because you need to know your numbers, and sort of there's some other kind of ducks that you need to have in a row before you get to that point. So again, don't start at the dealership. First thing you need to do is kind of know your numbers. And one of the things that's really important when you go to a dealership, one, you don't want to be taken advantage of. So the more knowledge you go with, not just, hey, this is how I want my truck spec'd out, this is what I'm looking for, but just to show that you know what you're doing, you wanna be able to paint the best picture that you can that's going to show that you are a good risk profile for a lender. And so you need to work on a few things first. Your personal credit being a big one. Even though you're buying this truck for a business and as a business tool, a big factor in what you get, especially when it comes to the financing of the truck, is going to be your personal credit. So yeah. You want to have that looking decent.
Let me ask you this, as far as approaching the financing issue with that in mind, not just running down to the dealership and taking whatever terms they throw at you. One thing that I often encourage of new business owners is to see financing not as an obstacle, but as a barometer. So, I mean, yes, it's an obstacle if you can't get financing, unless you've got a pile of, $200,000 sitting around. You're not just going to go out and buy a truck and trailer, right? So you're going to need financing, and the banks or whoever the lenders you're going to be working with, you can think of them as the barometer of your preparedness, your financial health, because they don't want a really risky loan on their books, right?
Yeah.
They want you to succeed, because if you succeed, you pay their loan back and they make money, right?
Yep.
And so if you approach financing with the idea of, I have to get past the gatekeepers, you're missing an opportunity to use them as a friendly gatekeeper, somebody who's going to say, it's not time for you yet, or, hey, you're prepared, you're ready to go, let's do this. Is that fair?
That's very fair. And so, when you go and you're able to kind of paint this picture, and you really should start off with your financing options. You want to have done some research and some studying of the market. You want to know kind of what the normal rates are out there. When you go with all this information and you can speak in an educated manner to lenders about it, that's going to set you up for such better success. It's going to show them that you're serious, you know what you're talking about. They're going to feel more comfortable with you. So, some of the things that specifically you're going to want to be able to talk to them a little bit about, they're going to want to know how much cash you have available, how much down payment you're going to have, kind of what assets you have in your back pocket. Hopefully you've got some, and, and when I say cash, like how much cash you have for the down payment, how much emergency cash you have, ideally, 3 to 6 months of, cash that if something happens, you're still going to be able to make the truck payment. They want to see that kind of stuff. And if you can, that's going to help them feel more comfortable. And then on top of that, just kind of diving a little bit more into it, when they can see that you've got some kind of business savvy, and you know what you're talking about when it comes to trucking, that again is going to help them feel more comfortable. You're coming with, even if it's not a full-blown written out business plan, but you're coming to them with a plan that they can see you've researched and you know what you're talking about, it's going to help out a ton. You need to tell them how much revenue per mile you think you're going to be able to get and why. What your cost per mile is going to be and why. And there are some tools on Motor Carrier HQ's website to help you with this. There's a kind of a startup cost calculator. There is a cost per mile calculator. All these things will kind of help you dial in those numbers so that when you start talking to lenders, you can do it in an educated manner. And that is going to help you fly through the process so much easier. And it's going to have an effect on your rate. The more comfortable they feel, the less risk they think you are, and the better rate they're more likely to give you.
And this feeds really well into what I was saying as well. Let me back up before I say that. You mentioned, hey, you don't necessarily have to have a fully fleshed out, written out business plan. It doesn't hurt though. If that's something that you're capable of doing, you have the time to do, go ahead and do it. Because I think you and I are talking to the same point, which is you want to be impressive to the lenders. And the way that you're impressive to lenders is by being prepared. And the more prepared you are, the more confident you're going to be throughout this entire process, not just in lending, but in trucking generally, right?
Absolutely.
Okay. Love it. So let's talk through some of the numbers. What do people need to know before they get started with the process?
Just kind of some of those that I already mentioned, what your revenue per mile is going to be, what your cost per mile is going to be, and how much cash you need and how much cash you have to be able to get your business up and going. If you've got all those things, you're ahead of the curve, and it's going to help you gain that confidence with your finance folks.
Perfect summation. Okay, so the next question then, the inevitable one, I lost track of how many times I've seen this title on like Reddit forums and whatnot. New versus used, Chris. What the heck do I do here?
That's the question that gets asked so often. And really for most people just starting out, let's be honest, you're probably going to end up getting a used truck. But with that being said, let's still kind of walk through some of the pros and cons, because there will be some of you out there who probably are in a position to be able to buy a new truck. So some of the pros of a new truck, one, a new truck comes with a warranty. It's new. I would say it's less likely to break down, but new trucks still break down. I mean, there's a lot of moving parts in these things. lots of things that can go wrong. So it still happens. But the nice thing is when they do break down, usually the tow bill is covered. If it has to be towed, usually all the labor and parts are covered. And so it just kind of gives you a level of predictability with what your costs are going to be that first 2-3 years when, it's hardest in the business. Those first few years are the most difficult. And so if you've got that level of predictability, that helps out with that.
Mm-hmm. And on top of that, it helps with your fuel prices, right?
It does.
Because the newer trucks, they're typically a little more fuel efficient.
The newer the truck, the more fuel efficient it is. One other thing that a lot of people don't really think about is with new trucks, it's often the financing is a little bit easier / better terms. And that's because the manufacturers will typically give incentives to buy new. And that usually comes through on a little bit better financing options.
Okay. So what you were saying earlier is like, hey, if you're just getting started, it's unlikely that you're going to be buying new, but it's possible.
Yeah.
And so there are some pros that go with it. What are some of the cons? If somebody's considering it and they think they might be able to do it, what could scare them away?
The biggest one is just it's going to have the biggest payment. It's the more expensive truck. There's so many things in it that are going to be more expensive. The first and foremost is that payment. The second, you're going to be upside down in it on the loan unless you're putting a huge amount down. You're going to be upside down on it for a while because they just depreciate so fast.
Yeah,
you drive it off the lot.
Explain what that means to be upside down on it.
Well, essentially, for a long time, you're going to owe more on the loan than you could sell the truck for. So if you buy a brand new truck for $150,000, essentially, you're going to take it off the lot and you won't be able to sell it for better than $125,000. So, day one, if something happens and you've got to sell it, you're losing money. And it takes, it probably takes half of the loan term before you get to that point that you've got it paid down enough that it's worth more than you actually owe.
Yeah. And there's one con about new trucks that actually surprised me, and that's insurance.
If you think about it, if you're buying a $150,000 truck versus a $50,000 truck, a big part of your insurance premium is what you're paying for physical damage if that truck gets destroyed. And so you're paying for $150,000 worth of insurance on a new truck versus a $50,000 worth of insurance on a used truck. Your insurance bill is just going to be less expensive.
Okay. All right. So let's get to used trucks. And like we've been saying, this is where most of you are going to live as far as what you're shopping for. So let's do some pros and cons there as well, because there are some cons, but let's start with the pros.
There are, and a lot of the pros are just kind of the opposite of the cons of a new
Sure.
truck. So, the lower the purchase price, and so all those things are going to be, you're going to have a smaller down payment, you're going to have a smaller regular payment, your insurance premiums are going to be lower. That big depreciation hit isn't going to be as bad, so you're not going to be upside down on the loan for nearly as long. And in some situations, you may actually, on a used truck, never really be upside down on it, which is a pretty big advantage. So all of that also, it just kind of gives you a little bit more flexibility. If you have a bad month, it's not going to hurt as bad. If something happens and you get hurt, you get sick, and you have to park it for a while, it's not going to kill you nearly as much as a new truck will.
Okay, so that's good on the pros. Let's talk about cons then with used trucks, because they do exist. I mean, some of them are obvious. Hey, it's an older truck. It's been on the road for a while. So that comes with maintenance risks, right? But what else should I be thinking about?
It's really, it all for the most part kind of boils down to that maintenance / downtime risk. You're also, one other little thing you might want to consider is you're more likely to have bad DOT inspections because things kind of have a tendency to break down a little bit more often. But if you think about that maintenance risk, that's a big one. It's going to break down probably a little bit more regularly. You're going to have more downtime. But there are also some things, along with the costs associated with that, there's some things that you can do to kind of reduce that risk. If you're a somewhat mechanically inclined person, or a decent amount of maintenance, and you can do a lot of your own maintenance on the truck, that can save you a ton of money. And in a lot of situations, that may be the difference maker that really makes it more advantageous, even if you can buy a new truck, to buy a used one, and you'll spend less money in the long run. And you don't have to be able to do a lot of the big repairs, but if you can just, repair airlines or little leaks, or even, trace down some, electrical wiring that goes bad and replace that. A lot of that stuff isn't super complicated. And, one of my favorite tools, YouTube University, you can find a lot of help on YouTube that will help you with a lot of those things. Everything from how to do an oil change to do some simple troubleshooting and replacing some things.
Right. Okay. Yeah, that's really good advice. So let's see. I'm trying to think. The other question I had before we move off of used trucks is, how used is too used? And are there certain makes and models you'd want to stay away from?
So I don't know that there's necessarily, every situation is different. I don't think there's anything that's too used, like especially for somebody that's very mechanically inclined. A very, very old truck, we're talking like a 2000 and before, there's a couple advantages you get with that. You don't have to run an ELD. And you also, for certain trucks of certain ages, you don't have all the exhaust and emission gadgets that are put onto it that half the time when they break down, it's because of one of those things. And so you've got those advantages. They're simpler to work on. There's more things that you can do rather than having to take it to a shop. So there's a lot of different advantages that way of buying used. One other thing, whether you're buying new or used, that I think everybody needs to take into account is there are certain makes of trucks that there's just not as many shops out there, or you have to go to a dealer to repair it. A lot of, some makes require you to go to a dealer to do warranty work, others don't. So keep that in mind, especially in your local area. Is there a specific shop that is always way backed out? And if that's the only shop that you can take it to, that's just going to increase your downtime. So keep that in mind also as you're deciding what kind of truck to get.
So you mean the slick new Mercedes-Benz truck isn't necessarily the best bet?
Yeah, it might not be, because it might you might be stuck in a shop for a month before it gets fixed.
There you go. Okay, so let's talk then about how to get this financed. Issues that people might know already, but might not have heard of. Where do you want to start when it comes to actually getting the financing for the truck?
Let's talk about kind of some of the different financing options.
Yeah.
So obviously you've kind of got your more traditional banks. Some of the advantages with them is they usually offer the very best rates, but the problem is they're usually going after the very best risks. That's why they offer the best rates. So if you've got a not ideal credit score, or there's other situations in your financial background, you may not be able to get a loan from these guys. And in all honesty, a lot of the times they won't give loans to brand new companies. And so you have to take that with a grain of salt. One caveat with that, with traditional banks, is traditional banks oftentimes will offer SBA loans, Small Business Administration loans. These are loans that are backed by the SBA. And it's one of the ways that banks can give brand new business owners loans, because it hedges their risk, because the SBA backs it up. You still have to fall in with kind of a certain box, but usually those lending guidelines are a little bit looser. And so you might not have to have as tight of, you don't have to be as tight of a risk or as good of a risk to qualify for those SBA loans.
Right.
So make sure when you're talking to traditional banks, you're also talking about that. And if you can qualify for one of those, oftentimes those are pretty good terms for a new startup.
Yeah, absolutely. And then similar to, driving down the freeway and you see mortgage companies are always advertising on the billboards, right? There are specialized lenders for truckers, right? For kind of industries like this.
There's equipment finance brokers. They're they kind of feel like a bank, but they're not really a traditional bank in the same way. You can Google them. You can talk to some of your other trucking buddies, who they've used in the past. Factoring companies sometimes will have ideas or places they can refer you to. They can do that. A lot of the times dealerships will also work with these guys, and a dealership, just getting the financing through the dealership is another option. But the problem is oftentimes when you're working through a dealership, there's a little bit of hanky-panky going on between the dealership and the lender. The lenders will give the dealerships incentives to point customers to them, and you're typically not going to get as good of terms with financing that goes through the dealership as you would being able to find it on your own. Not always. You want to have that as an option for you, but usually it's not. I typically look at banks first, then those other equipment financiers, then somebody through the dealership, and then you've got one more option after that.
All right, I'll bite. What's the other one?
So the last one is lease options. It's a different kind. I mean, it's still kind of technically a financing option. They're designed for higher risk situations, but they can be really tricky. They're typically structured in a way that is much more advantageous to the person giving you the lease than you as the lessee. And you can really get taken advantage of in those situations. So make sure you understand any lease option you're signing and you're not getting sucked into something that can ultimately really cause you some serious pain.
Right. It strikes me as one of those things. It's like check cashing places or something, like same day loans where it's, I'm glad these exist for scenarios where they're needed, but be careful, read that fine print, right?
Yeah.
Okay, cool. So any other loan types that you want to talk about, or was that the last one?
Not really. The last, there's kind of two last things that I want to talk about. And really, I want to go over some things that you really need to watch for and why you need to watch for them. So the first thing is not all loans are created equally because one, you've got the interest rate. And the interest rate kind of tells one side of the story. But then a lot of the times with financing, especially when you get into these lease option things, there are add-ons, whether that's like a loan origination fees and all other kinds of things that will increase the overall total cost of the loan. And so your interest rate isn't really telling you the full story.
Think of bankers like magicians. And I'm serious.
Yeah,
they want you to sign the loan, right? And
Absolutely.
they get paid on the size of the loan over its lifetime value. And so if they can get some extra fees in there, they're thrilled, right? And their bosses are thrilled. And so I say, think of them like a magician because their one hand is showing you, look at how low the rate is, hopefully, right? And all things being equal, to get the low rate, right? If you're looking at two loans and all things are equal, they get the one with the low rate, but all is never equal, right? Yeah. It's that fine print, the fees that you're talking about that can really kill you over the life of the loan.
Yep, that's true. And so another thing that you really need to watch out is kind of the term of the loan. Sometimes you get 36 months, sometimes you 48 months, 60 months. There's all these different terms. So, 3, 4, 5, sometimes even 6-year loans. There's pros and cons of each of them, and every situation is going to be a little bit different. Typically, if you've got used equipment, you're probably going to want to be on the shorter end of that, just because you never know what's going to happen. Mm-hmm. And the advantage of a shorter term loan is you're going to want to obviously pay it off faster, but you're going to be upside down for a lot less time. That's kind of the biggest advantage, those two things right there. The longer the loan, the lower the payment's going to be, but the longer you're going to be upside down. It just takes that much longer to pay off. And so you really have to look at your situation and kind of decide what you want to do and what feels best. Ideally, and I kind of almost hesitate to say this because it takes a lot of kind of personal self-awareness to really be able to answer this question honestly. But the ideal situation to do is get the longest term possible, but pay it off like it's, get a 6-year loan, but pay it off like it's a 3-year loan. So you make the payment like it's a 3-year loan, even though you have a 6-year loan, just in case something happens along the way and you need to make, you got a 3 or 4 month period when things are really, really tight, you can jump down to that lower payment. But most people, I would even say, including myself at times, don't have the discipline to do that. And so if you know you don't have the discipline to do that, just don't entertain it. Try to do it as short as you possibly can.
You've said a lot of Dave Ramsey-ish stuff on this podcast. That might be the Dave Ramsey-est thing you've ever said. All right. Should we talk about down payments?
Yeah. So when you do a down payment on one of these loans, they typically range anywhere from 10 to 25% is the most common. So
on a truck that's going to cost you a total of what normally? So 10 to 25% of
the total cost of the truck. So if it's a brand new truck, $150,000.
There we go.
And you need to put 10% down, that's $15,000.
Right.
If it's a $50,000 truck that you need to put 10% down, that's only $5,000. So it makes a big difference that way. $100,000 truck, you got to put 25% down, that's $25,000. And so you've got to be able to build that in. The lower risk you are, typically the less of a down payment they're going to require. There are times when every once in a while you can find a zero down payment loan, but they're pretty rare. And in all honesty, if you can, it's best to put a down payment on. That'll help that upside down piece best.
Okay. And yeah, it's kind of like I was saying earlier, it's an indication of your own preparedness and financial health. If you can't put a down payment down on a truck, that might be an indication to pay attention to, right?
Yeah.
Okay. Anything else about the down payment to pay attention to?
Just one last thing that I would say is, don't make such a big down payment that you blow your entire savings. A lot of the times cash in hand is better than, making a big down payment, just in case, that's kind of your emergency fund, and that gives you a little bit more flexibility. So don't drain your full savings just to make a bigger down payment.
Yep. Okay. Chris, the truck is only half the equation here. You got to tow something behind you. So what about the trailer? How does that factor into all this?
The biggest thing I want to talk about the trailer is making sure you're getting the right kind of trailer. And I've talked about this before in the podcast, but it really boils down to where you're at in the country and who your relationships are with. There are certain parts of the country where reefer trailers are better. Other parts of the country, we're going to find much more dry van loads. And then there's some parts of the country where you're going to find flatbed freight is the best. So you need to do some research where you're at and determine what is the best for where you are. The only thing that really kind of trumps that is if you've got already a relationship with somebody who is going to feed you loads. Then you just get the trailer that matches their loads. Your other option, you don't necessarily have to start a business with a trailer. There are bobhead loads out there where you're pulling somebody else's trailer. You can find those. You're typically not going to make as much money doing that if you can bring your own trailer. You've got more options, find more loads, and they're typically a lot better paying.
Okay. All right. Well, let's move right along. This episode's ballooning a bit.
Yeah, it's taking a little
so
longer.
Let's rip through a few hidden costs. You mentioned the fine print on loans earlier. What else should people consider when it comes to, hidden costs, things they might not have considered? What do you got?
We talked a little bit about insurance already, so I'm not going to dive too much into that. Make sure you understand your insurance. Your registration, IRP costs, that's going to cost you a little bit of money up front. You've got a 2290 heavy vehicle highway use tax that you're going to have to pay for an 80,000 pound semi. It's $550 a year. Your ELD costs, kind of getting your IFTA account set up. You're going to want to have maintenance reserves. And if you buy a used truck that needs tires, tires aren't cheap. And there's a lot of them on a semi truck.
Famously,
yeah. So make sure you're taking all those kind of things into account. And again, that's kind of where Motor Carrier HQ and the coaches at Motor Carrier HQ can help you out, or the tools that we've got on our website, the calculators there that can kind of help you dial in what those expenses are going to be.
Yeah, I was just going to say, when it comes to shopping for a truck, financing a truck, all these issues, and running the truck on a day-to-day basis, your team is vitally important. And I'm not talking about building a fleet and hiring a bunch of people to work for your company. I'm talking about the folks that you put around you, right? So you mentioned Motor Carrier HQ. That would be a great place to start. But whether people use that or not, you're going to be dealing with brokers and factoring companies and lenders and insurance agents and all that. if you can find somebody among that crowd that you trust, who treats you right and is honest and all that, use them to build the rest of your team to answer some of these questions. Is this a good loan? Or where do I go to get this question answered? You put that team around you, and like you were saying, Motor Carrier HQ, good place to start for that, right?
Yeah, absolutely.
Yeah. Okay. Chris, when should I not finance a truck? And I mean, besides being fabulously independently wealthy and having $200,000 sitting in a pile in my living room, when should I not finance a truck?
That's a good question. I'm going to kind of tick off some really quick answers that first. If you don't have an emergency fund, make sure you've got some savings built up. If you don't know your cost per mile, if you have no freight plan, if you're buying emotionally. And this is easy to do. This is business. Like, you've got to be able to take the emotion out of it. And one way that you kind of do that is just kind of pump the brakes on things. If you get all excited about buying a truck, there's nothing wrong with that, but you've got to kind of temper that excitement down a little bit. Nothing's going to change in 2 weeks. If you've done all this research, you've started this process, you figured out, you feel good about it, take a 2-week break. Talk to some naysayers. Just make sure you kind of step back, look at the picture, take the emotion out, and just take that 2-week pause. And at the end of the 2-week pause, if you still feel like it's the right thing to do, that's when you can jump in.
Perfect. All right. So I think that covers pretty much all the issues, but we went through a lot of those pretty quickly. So if anybody has questions about some of the things that we went over, definitely let us know, comment sections, wherever you happen to be listening or watching. But Chris, let's break this down into an actual example. We've thrown all these issues and numbers and terms around. What is this actually going to look like in real dollar terms for somebody?
Okay, good question. So let's say we've got an $80,000 used truck. You're going to put 15% down, which is about $12,000. So that means you're financing $68,000 at an 8% interest rate over a 60-month term or 5-year term. Your payment's going to roughly be somewhere in the $1,400 a month range, give or take a little bit either way. So you've got to make sure you've got the monthly revenue that you need to be able to cover that. You need to make sure you calculate that into your cost per mile, and that you're really kind of thinking this through in every way that you can before you do it. And if once you've kind of got all that honed in, figured out, your numbers, then it's getting to the point where, okay, maybe it's time to really jump in.
Yeah. Okay. And if you don't mind me injecting one last thing to note, financing for truckers is of such incredible importance. This is an issue that if you spend more time on anything else, understanding your business, I'd be a little surprised. And the reason for that is, if I'm starting a restaurant and I'm buying a building, or, if I'm starting some other type of business, I start a marketing or ad agency or something, I'm going to get a loan. And then eventually I'll pay that loan off, and I'm riding off into the sunset, making more profit than I was before because I'm done with my loan. Trucks don't work that way, right? It's eventually, okay, now you've got a 10,000 truck fleet and you've got a pile of working capital where you can just, throw money at new trucks and just buy them in cash. That's probably not going to be most of our listeners, right?
Probably not.
And so you're going to be buying and paying off trucks over the course of your career often. Right. Yep. This is not a one-time thing. This is going to last the duration of your career as an owner-operator. So pay really close attention to it. Listen to this episode several times. Head to Motor Carrier HQ. Ask your questions, because this is going to be of vital importance, right?
Absolutely. That's a good way to put it.
All right, Chris. Well, let's close out. Well, let me actually have you close out by telling me about your first truck buying experience. Did you do it right? And would you do it the same way if you did it today?
I feel like I did it mostly right, but there are definitely some things that I would do a little bit different. And one of the big ones is really the make. I learned the lesson the hard way, that how hard certain makes with certain engines are to get into somewhere that can do work on them especially if it's warranty work. So that's one of probably the biggest change I would make. But I feel like I did a pretty good job, and it was a super exciting time. Like, it was fun. Like, there's nothing more exciting than driving off with a new truck that is going to make you some money.
Right. I love that. So, okay, what did you buy?
It was a Kenworth T680 with a PACCAR engine, and I don't have anything against the PACCAR engine. I don't think it was necessarily a bad engine. It's just really hard to get serviced.
There you go. Yeah. And, in good BBC fashion, I'll say other fine brands are available. Okay, so this is not a commercial. Anyway, all right, Chris, I'll just remind everybody real quick to go to HaulinAssetsLLC.com for show notes. And make sure you go to MotorCarrierHQ.com for the support you need to make that jump to an owner-operator. Go to HaulinAssetsAcademy.com for some more self-directed learning about issues like this one. And then lastly, if you have 40 seconds and the inclination, go give us a 5-star review and a quick comment wherever you're listening or watching, whether that's YouTube, Spotify, Apple Podcasts, what have you. We would greatly appreciate it, and it would help the show a lot. Chris, thanks for coming. I'll see you next time.
See you then.